We've been following the trade desk for some time now on the channel, and the bottom might be in. A huge insider buy, a partnership with a massive AI company. Things could be looking up. I'll cover all of that and more in today's video. All right, party people. So you know that we are following the trade desk here on the channel. This stock that has been beat up significantly dating back to January of 2025. And so wanted to give a little update of some news that has transpired and why potentially the bottom can be in. We're going to take a look at those reasons, jump into the charts, and let's just go ahead and get into it. The bullish catalyst, the things that have occurred, and the primary thing being that CEO Jeff Green purchased 6 million shares. Now, that's not $6 million worth of the trade desk shares. That's 6 million shares. So that is a massive buy. That is a massive signal of confidence from the CEO that he believes in this company long term in terms of what they're going to be able to produce. And so that gives confidence to investors that, hey, if the CEO believes and he is putting his own money up, that will translate into investor confidence. So that was huge. But in addition to that, we also got news of a potential ChatGPT AI integration narrative emerging. They will be partnering with ChatGPT to provide ads on the platform. Now, there's nothing official, nothing announced of a partnership, but it is something for excitement that can give a boost to this company that has been beat up. So we want to pay attention to that to see if that does in fact come to fruition and how that will impact the company's bottom line. And again, we know that this stock has been sold off significantly since 2025, that the valuation has been reset. We know that it's struggling in terms of ad spend on consumer packaged goods and autos. And if that can change, that could flip the narrative in a positive direction. But we've also seen a significant increase in call options activity. And I'm going to show you the flow here just from March. And that's showing that traders, institutions are positioning themselves for a potential upside move. So we have to take that into account as well, just as being a bullish catalyst. Now, there are still bearish catalysts in place surrounding the trade desk. It is not all sunshine and roses. This is a long-term recovery that's going to have to happen here for this company. And despite the news about the partnership with OpenAI, Alicia Reese of Wedbush downgraded the company, lowered the expectations for growth, and said that the partnership with OpenAI, the enthusiasm that came out of it was overdone, and that people need to temper their excitement. And following her downgrade, you did see pressure to the downside on the trade desk chart. We'll take a look at that here in a second. And then just the other components that are weighing down on this company. The digital advertising market still facing macro headwinds. We know that we're in a restrictive rate environment, and we still don't know how artificial intelligence is going to impact the ad space. And we know that growth stocks have been crushed here recently, really since October, after we saw that massive push. We've been range bound in the market, and we've seen companies like the trade desk get compressed in terms of their multiple. So this stock remains in a clear downtrend, but we are seeing signs that potentially the bottom could be in. And let's take a look at this on the chart to see where we are, where we could go if we head lower, and what the possible upside targets are in the near future. Ladies and gentlemen, here we are on the trade desk. We're going to start by taking a look at the daily chart. And you could see the pop that we got off of the OpenAI news. And uniquely enough, that pop off of OpenAI was intensified because it was announced the same time that Jeff Green was buying 6 million shares. So you could see that this thing rocketed up from its close here on, what date is that? March 5th, all the way to the top of that candle. We had about a $7.72 move, and things were looking exciting for trade desk bulls. Now, to put this in perspective, that's only $32.95. That's well off of its high of $140. And you can see that it poked its head above that 50-day simple moving average, but it could not hold on to strength there. And since that time, it has just been dripping lower. We had 1, 2, 3, 4 consecutive red days in a row, got below the 10-day exponential moving average yesterday, Thursday, March 12th. And today, at the time that I'm recording this, we are slightly above that 10-day EMA at a price point of $27.12. Now, let's just take a look currently where the price action is and what we have in front of us in terms of important areas. We have this unfilled gap. If we mark this out from where it gapped up on that OpenAI Jeff Green news, and that gap is at 25.54. We know that gaps like to be filled, so we'll have to watch to see if it wants to fill that, grab liquidity before heading higher. So that is definitely an area that we want to watch. And in terms of other gaps below us, you have to go way down here to $9.32. And that is a gap from 2018. And things would have to get really extreme to the downside, really bad, if that was to happen. And not to say that it can't, because you never say never in the market, but you'd have to fall a long, fast, hard way in order for the price action to get down there. And you could see that right where the price is right now is a decent area of support on the visible range volume profile. And above that, you see the volume start to decline. So anything above 27.80 could lift us up into 35.71. But at the same time, you do have that 50 simple moving average that has been acting as a resistance. So that's going to be a key area. And then above that, you have the 100 that's at 36.47. That lines up here with where the point of control is on the chart. And then you have the 200 up here on the daily, and that's at $50.12. Lots and lots of resistance overhead, lots and lots of work for this thing to do. But you can see there are several unfilled gaps overhead on this ticker, 87.41, 118.51. So there are definitely imbalances that are going to need to be resolved at some point in time. Now, let's go take a look at the weekly chart to see where we are there. Again, tells a little bit of a different story with these moving averages. We can see that weekly 50 simple moving average is up here at $50.82. So you have room on the weekly. You do have a thick volume node here between 36.10 up to 40.35, and that aligns with some of those moving averages on the daily chart. And then you could see that we actually got a death cross here back on November 10th on the weekly. Again, that's a bit of a lagging indicator, so possibly another indication that this ticker has bottomed. And you could see oversold here on the weekly, which it hasn't been oversold. Really, that's only the second time it's been oversold on the weekly. You have to go back to last March, whenever all the tariff weakness came into play. So it doesn't stay down there very long historically. Now, not to say that it can't, but just something else to keep in mind. But again, still lots of resistance overhead, but that 50 is right there at 50.82. And then above that, you have the 200 weekly at 70.56. And then coming over to the monthly, I did want to take a look at this chart because this is the lowest that the relative strength index has ever been in the history of the trade desk stock. And it's not oversold yet, but it is awfully close. And we are seeing some significant volume beginning to come in here. There's still plenty of time left in the month of March, and you can see where we are already. And so potentially, again, another indication that a bottom could be in. And we just want to keep an eye on this. We want to see if this thing starts to flip up. But the trade desk has been beat down so much here as of late that it needs some positive catalysts, and they are starting to come in. And so what we want to watch for here over the next couple of weeks to couple of months is, do we see volume continue to pick up? Do we see bulls continue to step in? Do we get any more news about the OpenAI partnership, if that's going to come to fruition? Do we get any other positive catalysts about ad spend in the consumer packaged goods and the auto space? Those things could give some more upside lift to the trade desk. But the other thing that we have to be mindful of here is if we see broader market weakness, The SPX, even though there has been weakness as of late, is still lingering up near all-time high. So if that wants to come down and correct more, that could put pressure on the trade desk to the downside. But we are seeing some interesting developments here, especially after that gap down on earnings. It got bought up. And I didn't even mention that the company authorized another stock buyback. So in addition to Jeff Green's purchase, so you are seeing some other players come into the game. Now, let's take one quick look at the options flow for March on the trade desk just to see what that is. And then let's wrap up this video. So here is the options flow on the trade desk for the month of March from March 2nd to March 13th. That is today, Friday the 13th. And you could see the size of these orders. Now, you do have this May 15th, 2026 $30 strike put, which the premium is 1.2 million. So that is a significant order. Is that a hedge? Is that protection for downside going into their earnings report potentially? But then you could see from there all of these significantly large call orders. We have a $28 strike expiration, March 6th, so that one's already passed. You have this $35 strike, September 18th, 485K. You have another one, the same date, 462K. You have a $35 strike, April 17th, 431K. So you could just go through and see that there's been some significant increase in call activity and that the options flow does lean in favor of the bulls here. So going to continue to monitor this to see if this continues, if it continues to be bullish flow, and what that potentially can mean for the trade desk. So there you have it, an update on the ongoing saga of the trade desk, a company that has just been smashed, beat up, face put into the mud, some signs of life coming back, but it's not going to be a clean movement up to the top, but we are seeing some signs of life. Let me know down in the comments, do you think that insider buy by Jeff Green, 6 million shares, is a big deal? Do you see the trade desk turning it around here soon? I'd love to hear your comments down below in the video, and make sure that you check out this Sunday on the channel for the Sunday setup, where I will get you ready for the week ahead in the markets. Make it a great day, everyone.